Hello, this is Jeremy North with your educational and economic update for February of 2023. In this month's video, I'll discuss major headlines that influenced markets in January, along with economic and market events that we're looking at to influence February and the rest of 2023. Please stay tuned at the end of the video for the required disclosure statement. Stocks started off the year strong, with the NASDAQ leading the way for the U.S. equities. After a horrendous 2022 for the growth-heavy index, it soared 10.7% higher in January, while the small-cap Russell 2000 index jumped 9.8%. The very widely tracked S&P 500 advanced 6.3%, and the Dow Jones rose 2.9%. Looking at the S&P 500 monthly return since 1951, January 2023 stands as the ninth best start to any year. It's quite the rebound from last year, considering 2022 produced the seventh worst January in the last 70 plus years. Well, inflation slowed for the sixth straight month to 6.45% year over year. Also, the inversion of the yield curve continues as yields on longer-term treasuries fell while those with shorter-term maturities rose. For example, the 5, 10, and 20-year rates all declined by approximately 0.33%, while yields on the much shorter 1, 3, and 6-month Treasury bills increased in January. The 1 month saw the largest increase across the yield curve at almost 0.5%. All of this news and economic data led up to the February 7th interview of Federal Reserve Chairman Powell. He commented on how strong the labor market is, underscored by last week's January jobs report showing the U.S. economy added 517,000 jobs. This report caused him to say that the Fed has more work to do on bringing down inflation, as they believe the process will take a significant amount of time. Powell noted that the disinflationary process has begun as good prices has begun to drop, although service prices still remain high. He does expect inflation to decline significantly this year, but remains strong in his conviction that they may have to raise rates higher from here to get it down to the 2% target they're looking for. There has been an expectation that inflation will go away quickly and painlessly. I don't think it's guaranteed. That's the base case, Powell said. It will take some time. All right. One of his main reasons for wanting a weaker labor market is that the current tight labor market could keep pushing up wages, which in turn keeps inflation higher than desired levels. When unemployment goes up, pressure to increase wages drops and thus spending drops, which lowers the inflation rate. And the Fed will react accordingly with the data to ensure that it does. So he says. If we continue to get, for example, stronger labor market reports or higher inflation reports, it may well be the case that we have to do more and raise rates more. He said, even with inflation dropping for the sixth straight month, however, it's still above 5% year over year, which again is way over their desired 2% rate. As always, we are diligently assessing the economic and political implications for your portfolio. We still feel a truly well-diversified investment plan is critical, not one that is just 60-40 equities and bonds. That is why most of our clients' overall portfolio includes a percentage of assets protected from the market at different levels based on the client's risk assessment and preference. If this is something you want to discuss or learn more about, please give us a call or email me at jnorth@360ira.com. Should you have any concerns or questions or would like to discuss your personal situation, please give us a call. With all that being said, here's the disclosure I'm required to read. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investment involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. Thanks again. Jeremy North signing out for the month of February. I hope you have a wonderful month, and I look forward to seeing you all in March. Take care.